turn now to Bill George, Harvard Business School professor and former chairman and CEO of Medtronic, because he's been critical of Hewlett-Packard. He's one of the foremost experts out there on corporate governance and has been calling for the company to split in two since last fall. Professor George, great to see you. Do we need this kind of board shakeup that Corey's telling us about at HP to get things back on track?
Well, this will be about the fourth board shakeup we've had at HP. When Ray Lane came in, he asked 4 directors to step down, including the former lead director, Robert Ryan, which I thought was a huge mistake. This board has lost its institutional memory. There's no continuity. Now, one more change? Well, I think the board's got to start thinking more radical thoughts, like breaking up the company. If you're a trader, you love what's happened in the last 4 weeks. They played the expectations game. They beat the expectations. But the results look horrible. I mean, they were down 6% revenue, 6% earnings. The analysts have them down for 8% in revenues and 17% earnings for the next quarter. That'll be April 30th. This is the erosion of one of America's great companies, one of the great assets. And so I think it's time to do something very different strategically. That's why I'm advocating breakup and have 2 new boards and get it straight, because the institutional memory and the old Hewlett-Packard that I love so much is gone.
Well, it's long gone, Bill, which in many people's minds would raise the question, why allow these directors who have been tarnished by Hewlett-Packard's underperformance and misguided acquisitions, why not just turf them out and start afresh? Why not put directors in who would embrace a vision like yours, break the company up into 2 companies and allow it to be more competitive in the independent markets that they serve?
I think that'd be a very good idea. Normally, I'm not a big advocate of activist investors. I'm surprised none of them have stepped in here.
Well, they have, though. Ralph Whitworth is on the board. Yeah. JP, maybe the problem, Bill, is that Hewlett-Packard is such a big company that activists on their own, even if they were to be working somehow in concert with each other, there's some, as you know, some securities and exchange rules against that. But if they were to gang up on Hewlett-Packard, it would still take an awful lot of money to make things happen.
Well, it's up to $45 billion now. You look at, it used to be the stock was worth more than Oracle. Oracle's worth $170 today, Eric, and IBM's worth $230. They're 2 major competitors. And so I just think that you've had this series of missteps with the autonomy write-down. Actually, the number was 8.8 out of 10 billion acquisition price, and another 8 billion in EDS. People forget that. But here's the real problem. They can't make it strategically on 3% R&D. That's what they're spending. No one in the tech industry spends that. You know, it's 6 to 8. Medtronic, we never spent less than 10, even today. So I think Mark Hurd actually left the company strategically vulnerable, and they're going to have to make some dramatic changes to come back. Meg is trying to stabilize, and I give her credit, but I think it's going to take more radical changes than just trying to execute the current strategy better, because there's really no strategy there. And
you've given a lot of the business reasons for why you think this company should break in 2. Today's really about the shareholder on Investor Day. Describe what kind of shareholder value we'd be looking at from 2 different companies of Hewlett-Packard.
Well, I'm not an expert on valuation, but if they ran it, they're 2 different companies. There's the low-cost, commodity-oriented manufacturing business of PCs and printers. They just have to run that on a very low-cost basis and probably get it out of the Palo Alto environment, which is something that was an earlier suggestion by Dick Hackborn, who ran the printer business so well. And then run the rest as an enterprise system and start investing again in that business heavily in R&D and new products. And I think it's going to take a while, but I think you'd see a substantial uptick initially, because people would be optimistic this would correct the flaws of the company, and then for the long term, because they'd actually put some numbers on the board that indicated success.
Bill, thanks very much.
Right now, there's no strategy for success, so how can you believe in a company that's continuing to erode?